Hello and welcome back. My name is Brandon Watson. Today we are going to be talking about how I managed to gain 83% for the month of November. Now, before I begin, I'm going to ask that you like and subscribe if you find any of this information helpful, as it greatly helps me continue to put out free content for you all. Some of these videos can take quite a long time, and this one itself took about 7 hours to do the writing, the planning, capturing out all the screens, recording and doing the editing myself. So every like certainly helps. And now jumping right into our first trade. I'm sure by now you are all fully aware of Ocu and how amazing it's been these past few months. Well, Ocular certainly hasn't stopped providing, and quite frankly at this point I'm not sure when they will. In a previous video at the beginning of the month, I went over how I made $3,300 in 1 week, partially due to the support bounce we played at $9. Looking at the daily chart, you can see that Ocu just kept trending over the 9 EMA each day, building into a resistance at around 13.40 that finally ended up breaking on the 6th day of consolidation. So what I ended up doing was layering in shares each day as price continued to hold and make new higher lows above the prior 13.40 resistance. Using the 9 EMA on the daily as a stop loss while I head out to photograph a property on the 17th, you can see that we never even touched the 9, and instead on the following day we start again making higher lows. So I add a small order of 50 shares at 13.52 to hold overnight and test to see if we start making higher highs in the morning. Which we do, and even start to rally 10% on the 20th, so I take off 60% of my position to lock in profits as we start to head into the last week of the month. Could I have held longer? Well, yes, of course I could have, but psychologically I was already doing so well this month that I really didn't want to give up any profit by having a $6,000 position cave on itself the way NIO and Workhorse did with its crazy volatility the other week. Of course, as you can see, Ocu actually ended up holding, and by this time I already had some of my day trades back, so I ended up scaling back in as each day made new highs and higher lows, and then again scaling out another 60% to stack and lock in profit, while leaving 200 shares with an average of 16.55, which is a $3,480 position for roughly 20% of my account to swing over the weekend. Total realized profit is sitting at $624 for this trade, while each time I scaled out it was for a roughly 10% gain. The remaining 200 shares at 16.55 is still up 5%, although at this point, like I said earlier, I am really uncertain as to how much higher it can go before another pullback or round of consolidation. I mean, looking at Finviz, the average price target is at 14.83, although there was a recent upgrade on the 13th that reiterated Ocular Therapeutix as a strong buy with a target increase to $25 from $15, which if that price target actually hits, then from where we are at now still poses a potential for about a 40% gain. Keep in mind, Ocu used to trade at $44 a share back in 2015, so I don't think that $25 is that unlikely of a target, especially if they continue to come out with good news regarding their Detstenza product, which helps with ocular inflammation and also reduces the amount of eye drops needed after a cataract surgery. So we'll see, I don't know. But moving on to the next trade, we have PLTR, which again was another trade I mentioned earlier in the month, but just like Ocu, I didn't hold out as I figured the hype similar to NIO would turn this 40% rally in 2 days back down to retest a new support. Which again, it didn't, and instead trended up another 30% before Steve mentioned it to our free Discord group, which if you don't know Steve by now is the leader and creator of our group here at Trade Runner. So if you haven't joined, you can find a link to join in the description below. So after he mentions PLTR and how he is basically going to sell his mansion to buy tons of it, I come back to the chart and I am blown away by how it's still going from when I had sold it earlier in the month. So each day that I saw higher highs and higher lows are being formed on the daily time frame, I decided to scale in a little bit before selling all my shares on Wednesday in anticipation of a potential consolidation, as well as to lock in profits. Total gain for the 3-day swing came out to $900, which definitely helped with pushing the last week into higher profits. Trade number 3 comes in with NIO, which as I mentioned earlier had tons of volatile swings this month. If this wasn't played carefully, I'm sure NIO wrecked a few accounts as people bought tops and inevitably panicked sold on the crazy volume back down. We'll move first into the 30-minute, and we can see that after day trading NIO on October 29th, price dipped back to the 25 EMA, held and continued to climb each day. Now, due to how erratic NIO can be, even when in a trend, I had to buy and sell quite often just in case the hype decided to run out and the price decides to tank. Once that occurs, I actually end up attempting to short NIO for the first time on the way down, which actually ends up bagging a small profit. Due to how crazy things dropped on the last day by 25%, I decided to move on and look for the next trade, which comes in the form of DKNG. Draftkings is a ticker I really only traded at the beginning, from $24 to $40 range, before getting burned by Jim Cramer with his nonsense about how one day admitting he knows nothing about DKNG, and then the next claiming it's overvalued, thus resulting in a month-and-a-half long 40% retracement back down to 27.5. Once $30 held as a support back in August, I attempted another go at a swing, but still managed to botch it and lose money, so I gave up, didn't look back, and completely missed the 87% rally a month later. Now, we're nearly halfway into November. Draftkings is starting to look like Ocular bouncing at support, which comes off the 200 EMA, and my friend re-mentions it to me for about the 100th time since first getting Kramered out of my initial position. It was starting to look better, though. The only downside was the fact that we had a doji sitting right at a prior $49 resistance. Going into the 30-minute, I added 1 share to open up the position and another 20 shares after the price caught itself. This was fairly small in position size, so I held a few days as price consolidated and then flattened out, at which point I added another 20 shares during pre-market as I thought things would turn up from here, which, as you can see again right at the open, price dropped before quickly picking itself back up and finally bouncing off the 200 EMA on the 25th. Now that volume started to come in, I start to layer in more and more shares as the price holds the 30-minute 9 EMA. Digging deeper into the 5-minute, you'll notice each order was placed as price came back and held the 9. I figure after the 3-day consolidation we just had, this could be the start to the trend back up on the daily chart, and we start to knock out other levels of resistance. Next level being $55 before taking on 65. So as long as the price continues to build and hold each level, I think I will continue to hold this. Current DKNG realized profits for the month sits at $216, while my open position is up another $270 for a 4% profit since opening it. Current average is $50.48 with a $6,800 position on it, or 41% of my total account currently allocated to it. Next up, we have Apellis Pharmaceuticals, or APLS, which was forming a nice consolidation that was similar to AVXL. Unfortunately, I didn't put this on the watch list for the last video as I was already inside the trade and figured it might be tough for people to work their way in if the price already trended forward. APLS is rather low in volume and has been since I found it, setting at about 500,000 shares in volume traded each day on average. Looking at Finviz, the average target was 52.79 with 8 initiations this year for targets between $40 to $86 and current price at 36.79, which could turn out to be about an 8 to 133% gain if the upper target is met. Inside the 30-minute, I start the position with a single share to test out the drop at the open, which proves to hold, so I layer in more shares on day 1 once the price holds and trends higher. Day 2, nothing happens, and on day 3, I get faked out of my 60 shares thinking we hit a resistance and are heading back down. Barely losing much on the trade, I start to scale back in once the 25 EMA holds. The following day sees new highs, so I hold and add a few more shares at the end of the day after the support forms and holds. On the 17th, however, we get a nice pop right on the open with more volume than the previous day, so now I'm adding shares a little more aggressively while also being armed with a day trade should things top out and reverse, which thankfully doesn't happen. Instead, we trend higher to 44.5, top out and drop back down to the $41 range, which manages higher lows overall compared to the daily candles of the previous few days. The following day saw even more volume and another rally, this time topping out near 45, and I start to trim my position to take in profits and protect against a reversal which never comes. As of right now, I'm sitting on 120 shares at 46.40 for a 1.77% gain on the new position. Currently, about 34% of my account is allocated on APLS, and realized profits so far come out to $731. Assuming this consolidation holds from the last few days, there's potential for even more upside, though at this point, APLS is sitting on its all-time high with no real support being formed yet. So it could be kind of risky if you try and jump into it without seeking out a support that's been formed. Almost done with the list. Trade number 6 and 7 are another two that were mentioned to the group by Steve. The first one being AVDL. As soon as I pulled up the chart and threw on some lines, I knew it was going to be a good one. First thing going for it was a nice consolidation that was formed between $5 and $6. That month launch support formed so nicely and price action was already starting to move up, not to mention the earnings were just released, so I didn't have to worry about any upcoming release dates. First thing I do, buy a single share to test. Of course, the price drops back down after the morning rally and just trends down on a 30-minute the rest of the day, so that one test share actually saved me from a bigger loss. The following 2 days, price continues to retrace back down to the 200 EMA until finally we get another pop the following morning, and I'm in layering more shares onto the position going into the second day rally, which retraces back for 3 days to the 6.6 level before breaking its downtrend and moving into the 7.5 resistance. Going back to the daily, we can now see we go from holding $5 as a support to holding the 200 EMA as the support and are now starting to curl off it. Assuming the 200 EMA continues to hold, we may see AVDL attempt to take out the $9 level. Currently on Finviz, there are 7 2020 initiations for targets between $14 and $19, which could prove to be rather nice should we break over the $7.5 and $9 range. All-time high is a bit further back in 2003 for $43, though there was a $15 level created back in August of 2016, so I may be holding out to see if we attempt to take that on. So far we are trending decently, so no reason to panic or get worried in my opinion as of yet. Last but certainly not least is PIC, which I certainly know the least about. Senor Steve stated Excel Fleet, which is an EV company similar to Tesla, NIO, and Nikola, is undervalued and ready to pop. Well, Senor Steve, you may be right. Although with no average price target anywhere that I can find, the only thing I was able to see is the current trend, which shows resistance at $13 to 13.5. So going into day one on the 5-minute, I again start with a single share and watch as price holds the 200 EMA and builds along it. After starting with my test share, I shortly thereafter layer in a few more shares to bring me to a full 100 share lot. Towards the end of the day, price still holds and even starts to curl up, so I add 200 more shares to close out the day before I start to see that after hours is moving and up 5% more, which is encouraging going into the next day. Day 2 starts after coming back from Thanksgiving, and we immediately see PIC continuing the trend into pre-market and eventually spiking at 21% from the previous close. At the open, price starts to form lower highs but builds the base at 13.75. Not until after we start to clear that downward wedge do I start to scale in another 100 shares at the break of pattern and the last 100 at the close to bring me to 500 shares total at 13.35. Currently my largest position ever sitting at 7,425 or 45% account allocation. Although at this point I guess it's not really 45% since I'm using about 95% of my margin. So technically it's about 45% of my account balance at 16,400 or 23% of my account with margin included, which comes out to about $32,000 total. Current loan stock value at $30,200 with $2,550 left of buying power. Will I continue to add to some of these? Not sure yet. I may cut partial profits and wait for a dip to occur, though if things are anything like PLTR or Ocular, then chances are slim. Though if the price starts to drop like NIO and Workhorse, then I may have a chance to add more. So basically anything can happen.